We're talking about how to negotiate lower homeowners insurance. And I'm lucky to be here with Rifat Nikezi, who's a real expert in homeowners insurance. He's been in the business since 1996. And one of the reasons why I really wanted to have him here is because he really loves to explain to homeowners the ins and outs of their policies and answer their questions. So I'm so happy that you could be here with us.
Thank you for having me.
Okay, so we're starting with the basics. So how do homeowners find out what's actually in their policy?
Okay. Well, every homeowner's policy has a declaration page, and all your coverages pertaining to you are outlined in that declaration page.
So with homeowners insurance, what should be a homeowner's goal? Should it be, saving as much money as possible? Getting the quality? What should a homeowner really be looking for when they're looking for homeowners insurance?
As consumers, we obviously want the best price. You want a company that has an A rating. If you don't know where to find this, you can go to ambest.com, and it will show every company's rating.
Mm-hmm.
Now, why is that important? It basically tells you that the company that you plan on doing business with has money in reserves, so they can pay a claim.
Okay, so say that you're a homeowner and you want to see if there's a better deal that you can get on your homeowner's insurance. What's your game plan? What should someone do?
Okay, someone should come in with their declaration page, and we'll do a comparison, apples to apples.
What if a homeowner hasn't gotten their insurance reviewed in a while? What would you do then? You have a declaration page. Would you interview them about their state of their house, or what would
Yes.
be the step?
Well, you want to start from scratch because I like starting from scratch, because if they come in with their declaration page, I don't know how the other insurance professional rated it. Maybe it was 20 years ago.
Mm-hmm.
Things were different. Maybe nothing was changed in the policy. Maybe they started out with $200,000 of dwelling coverage 20 years ago, and perhaps it's maybe a huge house, and there's no way that $200,000 would be enough should, God forbid, something happen to that home. So.
Yeah. Hey, so what if you have a policy that you like and you just want to see if your company can give you a better rate? Can you just call them up and say, hey, lower my rate, and what would happen then?
Sure, you can have your company look into it, give them a call, explain you think you're paying too much money. That happens more often than not. You might qualify for certain discounts. Some companies have a retirement discount. There's a multi-policy discount. There's so many different discounts, so it doesn't hurt to ask.
Okay, so what if a homeowner shops around and they get two quotes that are similar? How do they pick one company over another?
The reputation of the company, the rating of the company. Some companies today with the internet, you may be able to find how other consumers feel after dealing with another company. The best way to, discover what a company is like is that after a claim. Obviously,
Right,
we don't
so
want anyone to have a
experience.
claim, but yes.
Right.
How smooth was that claim?
Right, so
How
that's the
quickly
important
did you
thing.
get your money?
And we talked a bit before about, what are the things that homeowners don't know that they're covered or not covered for. And one example is, in my house, we have these pipes that run under the house.
Mm-hmm.
And I learned that they're not covered by the insurance. And how would a homeowner know what's really covered or what to look out for? Is it just experience?
It should be explained to them.
Mm-hmm.
There's a section in your policy where exclusions are spelled out, or they're clear. Termites, that's not covered.
Oof, that's
So you want to be careful with that. Yeah.
Yeah. So how do you cover? Is there any way to cover something like that? Like if you have termites in your house,
No, I'm afraid not. Not with vermin. It's an exclusion.
So that's something that a homeowner just has to maintain, get inspected, because if there's damage, no one's going to pay for it except for you.
Right, exactly.
So one of the questions that I got from a homeowner is a homeowner living in Miami, and all of a sudden her mortgage company, she noticed that she had wind insurance or extra wind coverage on her insurance policy, and they just put it on there. There wasn't any communication about it. How does that happen, and what kind of recourse does a homeowner have?
Well, if you have a mortgage, you sign a contract with that bank that you will maintain a certain coverage.
Mm-hmm.
So you're obligated to agree with them. If you don't have coverage or you don't have the right coverage, they can go out and purchase the coverage on their own and bill you for it, and there's really nothing you can do about it. You'll probably be paying at least three times more, if the bank goes out and buys insurance.
Right.
That's what I've seen over the years.
Interesting.
Right.
I actually had that happen to me a while ago. So if you have that happen where the bank puts their own insurance on your house, then what can the homeowner do? Can they call the bank and get an alternate
absolutely.
insurance?
You call the bank and you find out what it is that they got for you, and then you go out and shop your own coverage.
You can get your own coverage.
And you'll get more coverage if you do it on your own, and better coverage, where you're protecting yourself as well as the bank's interest, and you'll save money.
So how does a homeowner know if they have too much coverage, or how do they know if they have too little coverage?
What is the contractor going to charge you per square footage to build your home back the way it was?
So will the insurance company have a good metric for that in your area?
Most reputable insurance companies do have.
Yeah.
You don't want to over-insure your house either, because let's say if you over-insure your home, that doesn't mean you're going to get that money should something happen.
So if you get too much insurance and your replacement cost is actually less, then you just paid for way more insurance than you're ever going to get back in money.
Yes.
Yeah. So let's talk about liability insurance. What is it? How much should you have? How do you tell?
Question to answer: how much liability should you have? My personal opinion is you should not have less than $500,000. That's my personal opinion. If you're in a busy area, you should have, I would say you should have at least $1 million. If you're doing well in life, God bless you, you should make sure you have plenty of liability. You should even consider an umbrella policy.
Get a free script that tells you word for word on how to negotiate lower homeowners insurance. Go to homeownering.com/insurance. How did you get into the insurance business?
The truth?
Yeah.
I actually, when I was in college, I dated someone whose family was in the insurance business, and I was fascinated by
that's interesting. So did your relationship survive?
No.
No.
No,